Thank you. So my name is John Laterra. I'm founder of Fabridge Asset Management. Spoke to many of you, had the pleasure of speaking with many of you today. We got a great panel today. Everyone up here on the panel is $1 billion allocator. I'll give you a quick update on Fabridge. So Fabridge is a real estate investment trust. We're a national REIT, and we specialize in credit opportunities. And for this panel, this is going to be a speed panel. So what I would ask each of the panel to do is if you could state your name or your company name, what type of investor you are, whether that be a private investor, angel investor, single family office. Also, what you typically invest in, whether it be real estate, tech, any preferred investment structures, the number one types of investments you are looking for right now. And then lastly, if you could please share your most valuable $1 million plus insight or lesson learned in business or in investing. And the way we're going to run this is each of you just take 5 minutes. You need me to go through these questions again, I'm happy to, but if you could just kind of go through it in 5 minutes, that would be great, starting right here. Thank you.
I run a single family office here in Los Angeles. Our primary asset is multifamily and shopping malls. We have about 10,000 units here on the West Coast. And I've been allocating to alternatives such as private equity, private credit, and sports funds. Most recently, we have been doing a lot of sports, but due to the economy changing, and obviously we don't know where Trump is going with his policies, but we're trying to focus on more liquid investments versus closed-end funds or funds that have terms of 7 to 10 years. So we preferring to do things that are, more in the 1 to 3 years at this point. What else do I have to do? I apologize. It's like a whole summary.
Any preferred investment structures you like, whether it be LLCs, SPVs, however you invest?
Entities don't matter to us. We really focus on the investment. We really, a lesson learned is really spending the time to do your diligence up front, because once you're in the investment, it's really too late. So we have a team, and we go through multiple levels of analyzing each fund, comparing it to other funds, go to conferences such as these, or maybe something that's more focused. So for instance, if you're looking at a private credit fund, which has been very popular over the last 2 years, you might want to meet 10 or so funds and then, compare each one to another, and, look at or focus as to if you want geography based in the United States versus international, what are their returns, their history, what is the AUM of the fund, that is the assets under management. So it might be an emerging manager that only has, let's say, $10 million versus another manager that might have $1 billion or more. And at the same time is what is their longevity, what is their history, what can you learn from them, and really focusing as to, which fund makes most sense for your strategy that you're looking for and your risk tolerance.
And my last question would be, and I know a lot of people in the audience have been asking me this question, when you invest, never mind the investment vehicle, do you co-participate, do you go directly in the GP, LP? How do you mostly structure your investments?
So on the real estate side, we only do GP. We are, at this point, looking to possibly take on outside investors. Till now, it's really been just family and friends, but we've grown pretty drastically. But at the same time, there's just so much cash you can put out on deals to further, for further growth, unless you're trading properties and doing 1031s. And obviously, in this market with the high interest rates and there's just no deals going on right now on the real estate side. So on the alternative side, we're still looking for new deals.
Great, thank you. Dan?
Second, third generation Italian-American. I built a private equity alternative investment business. We structured over $3 billion of equity. I was an elite basketball player in college, which I think was very helpful. We look at the world very differently. We think we're in very treacherous times, also times of great opportunity. We've done very large deals. We did the biggest deal in Tennessee history called Nashville Yards, which will ultimately be a $3 billion multi-use real estate deal, probably the biggest in the Southeast. We've done as much as 12,000 lots in a real estate deal down in Austin, and we're currently the largest player in manufactured housing, developer and landowner. We think, the largest crisis probably in America is affordable housing, and the technology of manufactured homes have been upgraded, but the communities are pretty trashy. So we've created high quality communities, and we're going to build that business from $2 billion of assets to 50 or something. It's a dire need outside of healthcare. We believe in the American dream. We believe, the country's a great country still. We're heavily involved in distressed assets. There'll be $1 trillion of reset multifamily loans that are underwater. We'll, do the entire capital stack in creative ways. We've done, 12,000 multifamily units, 15,000 subprime auto loans, all types of things. So we're willing to learn businesses and partner with very smart people who know those businesses for decades. And we want to, get very high returns. But like this business we're in with manufactured housing, if you look at these communities, they're better than starter or single family homes, and we're saving the consumer 60%. And the consumer's broke, right? 70% of the country is borrowing money to get grocery bills. So something's wrong in the country. I think everybody knows that in a substantial way. So how do you capitalize and how do you help revitalize, various very inadequate industries? Everything's broken, right? Everything the government touched, they broke. And most of these industries, like home building, is still doing the same stuff it's been doing for 100 years, and costs keep rising. So we're looking and willing to meet with people who have portfolios, recapitalizations, whatever. My dad was behind a company, Telzon. He and his partners took 90% of the handheld barcode reading market. It was a fascinating, great American success story again. And so we're grateful for the free markets. We're grateful we didn't get, thrown into a kind of a socialistic, very rough, not taxing capital gains, stuff like that. So appreciate everybody's time. Appreciate Richard for what he brings here. And again, we're open for business. Thanks.
JD?
So I'm JD here out of California. I come from a different background. I used to be a bariatric plastic surgeon. I wasn't too good at it, so I had to find a new job. So the next thing that came to me was commercial real estate in our family office. We currently have about $1 billion of assets under management, and we have capital to deploy. One thing about us, we're diverse. In commercial real estate, we started from the hotel business, of course, being Indian. And then going from there, we went to multifamily, self-storage, industrial, and senior care homes. So we're looking into data centers. We're heavily in AI. We also do our alternative investments, our oil and gas, commodity, precious metals, as well as bank instruments, SBLCs, stuff like that. So we're different. We're not your typical. We look at a deal from every different angle, because if you're talking about multifamily, how many times can you change carpet, paint something? Everything has an age, and how much do you push rents? So we come from a different angle. We had a property in Hilton Head Island, 64 units. We bought it for $4 million, and after 2 years stabilizing it, our broker came and said, "Hey, you can sell for another $2 more million, $6 million." I said, "You know what? I'm gonna do this a little bit different." I said, "I'll sell it for." I made a bet with our broker. I said, "You know what? I'll bet you I can sell it for more than $6 million if you buy me Super Bowl tickets." Well, I said, let me look at this perspective. Instead of selling as multifamily, what I did was we went to the county and got 64 parcel units. We ended up selling as a timeshare. Sell for $6 million. We sold it for $14 million. Looking things creatively. So what we like to do is look things different. For example, we had a property in Cincinnati, and we changed the lot lines and sold them as fourplexes. Holy shit, people were putting 3% down and overbidding. So we kind of look at things a little bit different. We're not your typical, numbers. We also underwrite people too. You might have a great deal, but you got to look at the people behind it. So sometimes, the numbers might not work, and things, the people behind it are great. So what we tend to do, we look at return on effort. We don't just look at ROI. If I have to put a lot of time into a project and the payout's not there, it's not a deal for us. Why, instead of 2x, why do you look a little bit more, look things different? So that's how we look at things prospectively. And so it's more of a relationship, not a transaction. If someone wants to do a transaction, I'm not your guy, to be quite, and we're all about transparency. How can we do it together? That's our mindset. And so that's how when we do development, we do a lot of development, we make it a community, okay? So part of one thing we do too, we're kind of innovated. Part of our management, we knock on everyone's door every 2 weeks. How's Billy? How's Bobby? Make it a home. If you make it a home for someone, it's 90% of that. And by doing that, we have no turnover, and we can increase our rents between 1% to 3% every year without, no doubt, because we made it a home. But the way we're seeing things is there's a lot of opportunities to come, and that's where we're seeing. A lot of our deals we're getting are not through brokers, it's through the banks. And making those relationships with banks, we have also great debt and equity components that, engineering the components of the capital stack. So that's how we look. We're in other businesses, senior care is one of the biggest opportunities. The seniors are retiring. There's never been this big of a generational wealth where so many seniors are retiring one a minute. And our seniors are living till 80. And there's 800,000 beds short in memory care. And then if you look at the component affordability, it's cheaper to rent than to buy. We're 4.8 homes short in the United States, and we can't build them enough. So, there's so many opportunities there's a lot of programs out there where it boggles me that there's grants, special HUD financing, where the DSCR is so low. And so we see a lot of opportunities. And to the question, lessons we learned, the most expensive real estate in the world is the graveyard. Why I say that? There's ideas, woulda, coulda, shoulda, that billion-dollar idea. What I tell people, pursue everything. Don't, people say, hey, fall back, fail forward. Learn. We lost a lot of money, but by learning those mistakes, I want to fail now. And that's where in the environment today, people are scared of failing. Why don't you fail now? I tell my kids, fail now. That's what happened. In plastic surgery, bariatric, I failed a lot of times. I'm just kidding. I couldn't make those mistakes. But yeah, just don't Google my name. But like I said, we are in the best country. We're 99% better than the rest of the world. If someone says they can't do it, you have a problem. So, the average, to be top 1% globally, all you have to make is $32,100. So you're already top 1% of the world. And if you look in the United States, if you make more than 400,000, you're top 1%. So if someone says they can't do it, man, you have a big problem. Because all real estate, is all mindset, 99%. If you think you can or think you cannot, you're already right. So guys, fail now, make money. Making money is not that hard, is the consistent mindset. And that's how you go from 0 to 100. Fail. It's a learning journey, So, sorry, I went off tangent there.
Okay.
Yeah.
You're a hard act to follow.
Got a hard one to follow.
Tough setup. I work at Raymond James. I work here in Beverly Hills. My team of 5 advisors and 21 support staff manages $6 billion. Many of you know my partner, Lisa DeTana, who is twice the president of the Chamber of Commerce here in Beverly Hills. I do 4 things at Raymond James: fully functional family office and high net worth. I do investment banking, about 30% of my practice. I do foundations and endowments, and I'm one of the few people on the street that's doing liquidity raises for family offices, venture capital funds, private equity. The present discount is about 50%. And on the reverse, if you're a family officer and investor, why wouldn't you call me and put in an order wanting to buy some of the special purpose vehicles that we raise to add to your family? In the family office space area, I work very hard in analyzing private equity and venture capital ladders, in addition to rebalancing whole estates across the whole of the platform, not just what we have in multiples of managers, including offices, real estate, private holdings, both cross-border. In the investment bank space, I work with businesses 5 million EBITDA valuation, 30 million and up, to raise growth capital or do M&A, exit, or ESOP. In the foundation and endowment area, I've been working very hard for more than 20 years to reorient the thinking to be allocating to stocks, alternative asset classes, and fixed income in that order. I follow very closely the NACUBO, National Association of College and University Business Officers recommendation, which is 53% in stocks, 26% in alts, and 21% in fixed income. If you listen to, for instance, the Chief Executive Officer of Apollo, who I recently met with last week, they recommend 30% in stocks, 20% in bonds, 30% in private equity proxy for equities, and 20% private equity proxy for fixed income. I'd be happy to answer questions later if we can help.
Thank you.
I'm going to be a little bit coy because my boss has not allowed me to use his name. It's a 5th-generation family office. Actually, the baby was just born, so it's now a 6th-generation family office out of Europe. Extremely large family office with holdings across multiple countries in Europe. My boss is the troublemaker, youngest brother sent to America to get him away from the family. So he does venture, he does private equity. Now, he says that about himself, so I'm not being facetious here. My role, I'm interesting, I actually was in the audience 10 years ago trying to raise money. And over the time, I've gone from advising family offices to finally getting hired by a family office. My role used to be technical diligence. I used to be a college professor, so I would be called in by families to bring in expert guidance on particular deals or transactions. In this particular role, I basically supervise our direct investment portfolio. My boss does not like paying fees, does not like funds. He basically only goes direct, or he'll co-invest with other family offices. We have 2 essential investment theses. I'm going to be very transparent in case some of you who might have a deal would be helpful to us. The Scandinavian family, so this is a non-political comment, but we invest against the ability of America to solve its problems. An example of that is food security and food supply is in crisis. There's a very significant likelihood that the San Joaquin Valley will collapse its ability to produce food. So 10, 15 years ago, the family started investigating and both investigating, researching, and investing in urban and vertical farming capacity. And we're looking at technologies adjacent to food production and a transition from dirt to industrialized food production. So any technology adjacent to that, we're looking at and investing in. We're actually building facilities. We also build data centers, and the heat from the data centers funds and provides the heat for our farming production. We also do logistics and shipping and warehousing and transportation around food capacity. The second thesis we have is around critical minerals and rare earth minerals. And so we own mining operations in multiple countries. And we are in the process of trying to basically go to war with China economically. As a family, we believe they have a stranglehold over rare earths. Most of you don't know that every critical mineral in the world that's mined anywhere in the world is sent to China for production, the next stage processing. So our thesis is that we have to allow the Western world to have that capacity. So we're working with several large family offices I can't say much more about the transactions, it's still in process, but it'll be a very, very substantial US-based processing facility. So our family likes to build industrial capacity and invest on 30 to 50-year time horizons. What else we're looking for? We are very sick of LLMs. We don't want to look at AI as a consumer product. We're looking for embedded AI or autonomous AI, AI in hardware, AI in production, AI in systems. And we're looking at several transactions or funds that invest along that thesis. And then on a personal level, my boss again says this personally, he spent 14 years trying to have his first child, went through 7 or 8 rounds of IVF. Anything that has to do with fertility treatment or innovations in female healthcare, that's one of his passions. And he would love to talk to people that have any investment in that area.
Great, so we have about 2 minutes left. I just want to hone back in on the question. I know a lot of the attendees are probably looking for the answer of that $1 million plus insight or lesson that you could give. So if there's that one large insight, that one main insight you could give the attendees here today, what would that be? And anyone could start.
Never quit.
AD, you go last.
Never quit. Never surrender. Don't listen to anybody. No, seriously, be delusional, but have some skills, and partner with somebody if you can. Be humble at the same time. But, I mean, to be successful in America today with the amount of pounding you're going to take, persistence is better than a Harvard MBA, especially if you have integrity with that, is better than anything you could bring to the table. Showing up every day and competing at the highest possible level. You have the skills to compete. And over time, if you compete every day, you'll eventually be very dangerous and have a lot of skills. Also create a world-class network. You don't need 1 million people. It could be 3, and they could control 5 people. One of my dear friends here is one of them. And you have that, and you can aggregate things, and you can, effectuate change and do large transactions.
I would like to add that, many of you have worked really hard to make your money. And what I've seen with, different family members or other people that I've worked with is that you make all that money and then you have a friend or a family that gives you these investment ideas. Just stick to really putting your money with a real bank and in areas where your money is safe. Maybe take a small allocation. And if you're interested in getting into like a restaurant or something that has high risk, but the bulk of your money really should be placed in safe places where you're going to wake up tomorrow and it's still going to be there.
We're just about out of time. Does anyone have any last minute
Can I just...
Eddie, no, you can't do that, buddy.
Sorry.
And 30 seconds. I'm from Utah, so this has context. Always say yes to a beer. 3 of the families I've worked for have all started with interesting conversations at events where I didn't know who they were. So be social, talk to people, learn about them as humans. If the transaction is how you lead, you're not going to be successful. Start with human contact.
On our private institutional client desk for clients 50 million net worth and up, we have between 10 and 13 offerings a year. My team did the first liquidity event for SpaceX. We did the second liquidity event for SpaceX employees. In April, we'll do the 3rd liquidity event, the last one, and it'll be the first Grok XAI. You might be interested. You can give me a call. And we'll have those available. But in general, we're happy to help anything we can do. I love to talk shop, as you can tell.
Great.
Just real quickly, invest in yourself. That's the biggest thing. Knowledge is power. And, I love talking to everyone. Look, I'm an idiot in training. I have a growth mindset. I want to learn. There's probably smarter people than me. But how do you do it together? But there's one thing. One short story about Elon Musk. Elon Musk, Tesla was going to go bankrupt in 2016. They couldn't build those cars fast enough. But he had outside-minded thinking. He said, hey, how do I produce these cars fast enough? His thinking was, hey, let me hire lazy people. Why? Why would I hire lazy people? Instead of going, building a car from A, B to C, he said a lazy person will find the shortcuts, go A to C. So that's what made Tesla. And there's no one better than me or better. I would love to talk to anyone. There's opportunities. There's some things I don't know, and there's some things you know. Let's collaborate and do it together.
Thank you. Thank you.
If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.